Good, man. So let's get right into it. So you're a mortgage banker.
Yeah, I work for United Mortgage. We are a bank. I spent the first 20 years of my career as an underwriter, and
Wow.
just switched out off into sales about a year and a half ago.
You said the first 20 years. I thought you were like 30, man.
Now I just turned 40.
Oh, you look good for your age, man. So
Uh,
explain for the audience, what exactly is a mortgage banker?
basically, the bank means that we make the decisions in-house. So we don't have to, like a broker is a third party middleman who sends it out to different companies. Whereas when you apply with me, it's my company. We don't go anywhere else. We have our own staff.
And how long have you been a mortgage banker now?
I've been a part of a bank for over 20 years. I started with the underwriting side of it. Well, I started in sales, and
Okay.
then I moved to operations and underwriting, and then came full circle back into sales.
And you've been with this same bank for 20 years.
No, nobody on Long Island stays with the same bank that long.
Oh,
I've
yeah.
been with this bank about a year. My last bank was about 10 years.
Why
So
does nobody in Long Island stay this same bank that long?
we're all very competitive.
Hmm.
So I mean, taking away the big boys like Bank of America, Wells Fargo, Chase, on Long Island, the mom and pop bank, as we are, sometimes classified, there are a lot of them.
Hmm. Right. So there are a lot of mom and pop banks. So but what made you switch over? Was it did you get laid off? Did you decide to switch over? Like what made you bounce from bank to bank?
So each bank has their own certain overlays that they can apply. Um, you take everything to the basics of Fannie Mae, Freddie Mac, or FHA, or even the VA.
Right.
They have their guidelines. Each individual bank can impose their own set of rules of different things that they may or may not want to do.
Hmm.
My current bank doesn't have the overlays. So you have access to a lot more programs, a lot more flexibility. And especially with the onset of the non QM portion of the world, it's really was just a better fit than where I was prior.
So that must be annoying though to switch from job to job to job to job. That must be really inconvenient, no?
No, I was at the last bank 10 years.
Okay.
So I was 10 years with one bank, and then it takes a lot to take an entire sales team and move to a different lender.
Right.
So now I'm 40 now, another 10 years with this lender. I'll be 50. I don't think I'm going to want to go through the stress and hassle of switching banks again.
Right. I can imagine it must be a lot of paperwork and a lot of even a lot of emotions. So would you say, slightly personal question, but would you say that your salary has been linear over the years, or has it been like more fluctuating over the years?
Anybody in sales will tell you it fluctuates. Last year with the rising inflation, rising rates, everything else like that, it was a tougher year. But now we're seeing the rates come down, so things are getting better.
So when the rates are down, that benefits you guys.
Well, it benefits everybody. So when the rates are high, people aren't really looking to buy houses and get into mortgages. So you
Hmm.
don't have the clientele. So
Right.
now rates are low, more people are out, you got better purchasing power. So now we have more clientele to work with, and that's what helps.
It benefits us realtors too. So what exactly inspired you to pursue this job?
Uh honestly, way back when I graduated high school, passed my Series 7, became a stockbroker. That was in 2000.
Wow.
And then I had friends that were mortgage brokers and bankers, and they were doing better than stockbrokers. And I said, oh, I could actually help people get something that they want rather than chasing them and trying to sell them a stock that they never heard of. So that's really what drove me into mortgages. And once you're in, it's very hard to leave
Why is it hard to leave?
because it's what we know, it's what we do. I believe in my product. I believe in actually helping people attain that goal of homeownership, or if they already do, how many conversations I've had somebody that can refinance their home, lower their payments, get money, and they're like, how do I'm paying less per month, but now I have like no bills? How does that work? It's uh it's a fulfilling job almost that is way better than anything else out there in the sales world where you're just trying to punch somebody into getting something.
Right. So I'm assuming that you're talking about being a stockbroker because being a
Yeah.
stockbroker, it's, some people say that there's some greed involved, and some people say that it's similar to like, maybe taking people's money to a certain extent. And with where, go ahead, you had something to say.
Listen, there are some good stockbrokers out there, and there are some other ones that like to flip the money around and just look for that profit margin.
Right. And whereas your job now, you're actually helping people. Like, yes, you're getting paid, but at the same time, you're helping people genuinely. So, have you ever thought about being a mortgage broker?
I've thought about being a broker, but when it comes down to it, brokers have to go to a bank to get the job done anyway. So where a broker may have 10 different banks that they work with and they can shop around for the best price, I work with one bank, and we're Fannie Mae, Freddie Mac, FHA Direct. We don't need to worry about shopping. We're getting the loan funds directly from the end investor.
But don't brokers generally have a higher salary than mortgage makers?
It depends on what they want to do. A broker will always make a fixed percentage on every deal.
Interesting.
The bank has the ability to, we still obviously the bank has to make a profit on it, but we have more flexibility with that.
Very, very interesting. So tell us about your very first year. I know it was a while ago, but the first year is generally the hardest, and businesses tend to snowball. So tell us about your very first year.
My first year in sales was actually a pretty good time in the market. So people were calling in. At that time in the early 2000s, we had a lot of different programs that don't exist today. You could do a split mortgage where you'd get a adjustable rate, a fixed rate introductory for 2 or 3 years, and then it would be adjustable after that.
Right.
There's a lot of 100% financing with first and seconds. So really, each decade has presented us with new challenges or new opportunities for the different styles that are out there.
So it sounds like the first year was pretty rough, no?
Yeah, not really. I've always been able to talk to a wall. It's something that growing up I could talk to anybody, and
Uh-huh.
that's really, I didn't consider it selling so much as telling. Somebody calls me, hey, I want to buy a house. I need $300,000. Okay, tell me about yourself, and I'll tell you how to achieve that. That was really, kind of like my forte into it. I'm not a good salesman. I just tell people straight, here's what you need to do.
Interesting. But your job is 100% commission based, right?
Well, now I run a sales team. I have a team of 15 people under me.
Wow.
Um, so I do get a little bit for taking on that responsibility. But yeah, primarily any of my individual clientele that I talk to is commission based.
Right, but you have no salary. You're commission
No.
based, right? Okay. Interesting. Very interesting. So Sean, walk us through a normal day in your shoes. What time do you wake up? Coffee or tea? Walk us through a normal day.
Well, I have 3 kids, so waking up is early for the first one to get onto the bus.
Right.
Coffee, almost black, and then I usually
Almost
get,
black. You put a little bit of milk,
yeah,
a bit,
maybe a thimbleful.
a
Not,
teaspoon.
yeah, not a lot of milk at all. And then usually by the time the night before leaving the office, I always set out a list of the to-do list of the things that need to be done.
Mhm.
Because my responsibilities as the manager of the group, as well as my own individuals, I have to make sure I'm taking care of everybody all the time.
Right.
So every day is a different animal depending upon the needs of the group.
So your team is the priority. You're not actually going out there trying to find more clients at this point. It sounds like serving your team is the priority as opposed to going out and prospecting. Is that correct?
No, I still prospect. I still do open houses with my realtors on the weekends when they have the open house. I'm still there, and then having my team to back me up because sometimes I've got a soccer game to get to,
Mhm.
and one of my guys will go take care of the open house for me. Or if they're having a client come in and they're a little green, I have them sit with me and them, so this way they get that knowledge of 20 years to go along with their personality that brought the client in. So it's really both. I work with all.
So it sounds like you're juggling a lot. It sounds like a 7 day week sort of thing. Is that correct? Do you work 7 days a week?
As we're here talking Sunday at 2 in the afternoon, absolutely.
Yeah, I mean, I can already tell by the way that you talk that you don't have a regular 9 to 5 job. You're working like pretty much 24/7. You're juggling your kids and your team and your prospecting. So that must that must be pretty stressful, no?
Sometimes it gets stressful, but at the end of it, I've been doing it so long, it's the norm. Some of my clients have odd hours as well. If I'm working with a police officer, a fireman, or a nurse, these guys don't work 9 to 5 either.
Well,
So
they kind of do.
some of them don't. My sister-in-law, she'll work 40 hours in 3 days and then have 3 days off.
Right, right.
But a lot of times, they may not be available until 8 o'clock at night. You know, and I make myself available to them, which is something you can't get out of a normal bank.
Right. So it definitely sound like a busy man. So Sean, what is your favorite thing about being an MB? Can I call it an MB? Is that appropriate?
I'm a mortgage banker or well, I'm an MLO is the official term on an MLS.
MLO. Okay. Okay.
Yeah. So really the best part of being an originator is when we get down to the closing table. And you got this new family is finally through buying the house and they've told you all their friends' horror stories and the things like that went on. But because I've been doing it so long, I roadmap it and make sure everything is smooth, no surprises. That's why I feed on my underwriting experience to build the file in the beginning, so this way it goes through smoothly.
Right, right. Everything starts at the beginning. So what is your least favorite thing about being an MLO?
Um, Perhaps unrealistic expectations at times. Um, time frames. I can generally close the loan in 30 days as long as everything falls into place correctly.
Hmm.
If the buyer's attorney is requiring a survey and the surveyor is 3 weeks behind, and then that takes 2 weeks to get in, and it's title judgments against the seller, and those things delay the process, obviously it's the bank everybody blames. So that can sometimes be, the worst part, trying to be like, no, unfortunately, it's not me, but I'm also the one who answers the phone to give you the bad news to say, no, we're not closing yet. We've got to deal with the title problem that your attorney's working on.
Right. What I would imagine that there's some ego involved because a lot of people don't want to put the blame on themselves and they might pass the blame to you. So I am genuinely curious. How do you deal with people who have a horrible credit score, have a low income? How do you like do they even have any options with you guys? Let's say someone has a credit score of 500 and they make 25K a year. Are they even eligible for anything?
Well, not on Long Island, not making 25K a year. But what would happen is after we do a soft pull of the credit, we see that the score is that low. Well, we have two bureaus worth of information, but because it's a soft pull, it's not a hard inquiry, so it doesn't affect their credit. And then from there, if you've got a 500 credit score, it's pretty clear why. After doing this for so long, I could tell you, hey, that credit card that you have there has a $500 limit and your balance is 499. Pay that down to $100 and your
Mhm.
credit will go up. And it's something that I can see and I will help them grow their credit. And then as far as their income goes, look for a co-borrower, look for a co-signer, a parent, a
Yes.
relative.
Yes. Yes.
Even somebody that's not going to live in the property with you is allowable.
Yeah, actually, a lot of people don't even know about cosigners, because they don't teach us this in school. But the cosigning is very, very important. For those of you that don't know about it, look into it because it's very, very important. So how about let's make it a little more interesting. Let's say someone with an 800 credit score making 30K a year. Are they eligible for anything?
It depends on how they're employed and their ability to repay a loan and how much money they have for a down payment. So, taking your example of 800 and showing 30K a year, let's say they're a self-employed business owner and that 30K is the bottom line on their tax return.
Hmm.
but they grossed 100,000 for the year, and they write off a bunch of different expenses, depreciation, mileage on their car, different things like that. That all the accountants are good at paying less to the IRS,
Yes.
and they have a 25% down payment.
Hmm.
So now I know by looking at their bank statements, they are earning more than the bottom line on the tax return. And we have programs that can be based off of your bank statements. If you have a business, 12 months of your bank statements, we average the net deposits we get the accountant to tell us what the true expense ratio is, and we can qualify that way. Investors, if they have, again, over 660 FICO score and at least a 25% down payment, you can buy a house with no income. It's an investment property. It's going to be rented. That's the income that is qualified off.
Do you prefer to work with investors or regular home buyers?
Both. I have no preference.
As long as they don't flake, as long as they're serious about what they do, because some people do have a preference. I do know some people who I won't name who don't really like to work with investors. So like I even know some real estate agents who don't like to work with investors. So I always like to ask that question because everyone has a different answer. Sean, do you work with commercial real estate as well?
No, we're strictly residential.
Is there a reason for that, or?
There's a lot of business in the 1 to 4 family residential. We do have certain programs that'll go up to 8 units mixed use in the non-QM world of things. That's the new non-standard. So it's not your normal 1 to 4 Fannie Freddie FHA loan, where they have the more interesting guidelines, let's say.
Right.
But I would say 99% of my business is 1 to 4 family residential.
Okay, so no commercial at all. Is there ever a chance that one day you will switch over to commercial, or you don't see that happening anytime soon?
It's always been a thought, but commercial lending is a whole different animal.
Yeah.
So right now, I can safely say that I am almost an expert because you never know everything
Hmm.
between FHA, VA, Fannie, Freddie, and Sunny Mae.
Hmm.
So if your loan isn't fitting into one of those five end investors, that's already I know all of that. And then to bring into commercial lending, it's it's just you'd have to have a commercial bank. You have to, it's a whole different ball game.
Right, and I also heard that there's a lot of politics in commercial real estate. Sean, where do you get your leads from?
Relationships, all referral based.
Oh, so you don't pay for any leads? No, none of that.
No, no, I do right by people. They send me their family and friends. I do right by my real estate agents. They send me their clientele. So I make sure that everybody leaves with a positive experience, so that they call me back in the future when they or anybody that they know needs some kind of mortgage.
And I would imagine that you go to real estate events.
I'll go to events. I have gone to a couple of different events, and I'll go and walk around and rub elbows. But when you go to the events, everybody's already got a lot of their own relationships with their bankers or their appraisers or whoever it may be.
Yeah.
I really shine when I meet a new real estate agent on the selling side, and I say I'll close this deal before Halloween, and they go, "There's no way that's going to happen," and I got to clear to close this Friday that just passed. Then I meet that real estate agent, and they say, "Wow, okay, maybe we can work in the future because I've never seen like we got this loan in and clear to close in 2 weeks."
Yeah, I would imagine that, I feel like, for the people that are listening and for the people that are thinking about getting into our job, real estate agents and loan officers, we work hand in hand. It's like, it's a very one hand washes the other sort of business. And even me, myself, I have like several loan officers that I really like, know and trust, and that I like to refer my clients to. Um, and it is difficult because there's so many real estate agents and so many loan officers, so many mortgage bankers that it's hard to gain that like number one spot in someone else's head. So it brings me to my next question. Do you view other mortgage bankers as competition?
Absolutely,
Hmm. Interesting.
absolutely. Other banks, it's really down to the individual loan officer. if they know what they're doing, then yes, they're competition. Because any bank that is somehow, some way on with lending, they've got the license in New York, they can get access to everything that I can. But if they don't
Interesting.
have the knowledge in the programs, then they're just not competition. But they could be.
That's very interesting. Very interesting because a lot of people say, I don't view that as competition. I view them as helpers, and we help each other. Like even realtors, sometimes realtors will say, "Oh, it's not a competition. We're here to help each other." So I felt like you gave a very, very honest and sort of raw answer, which that was a very interesting answer to me. So you did answer this to a certain extent. I'll ask again though. Approximately how much per month do you spend into your business?
I try to, as far as an advertising budget,
Oh, as far as everything goes.
my bank provides all the business cards and flyers that I need. I don't spend any. I don't buy leads. I don't have a dialer. It's really, I built relationships over 20 years, and that's really what feeds my business.
Very interesting. Very interesting. Because, I would say that most mortgage bankers do put money into their business. Would you agree with that?
I do have some guys that do buy leads. I did have one loan officer who paid a telemarketer. Do you get business from that? Yes. But I find that once your book is built, it's really the referrals is what drives me.
Well, this brings me to my next point because remember before I said the beginning is the hardest, and I feel like you're kind of at that point where you've built the snowball and you have so many people, in your phone, and you're known, and people know, like, and trust you. And I feel like you're at that point where you don't have to put money into your business. You don't have to pay for leads, but I would say that for a lot of rookies, they might have to. Would you agree with that?
Yeah, they may want to. They need to get themselves out there. I remember when I started, my boss at the time put me and this other young loan officer, and he said, "All right, take today. Just get out on the road and stop at every store that you see. Stop at the pool company. Stop at the flooring store. Stop anywhere that you can. Meet people and say, hey, do you offer financing? Maybe we can help and do it through the house." Um, in the beginning, yeah, it's a lot about meeting people. It's a
Yeah.
contact sport. The more people you get into contact with, the better you are.
Well, I would even go as far as to say that it's somewhat of a popularity contest.
Could be, could be. Um, I know one of my younger loan officers likes to go. Well, he's got I don't know if it's the NMLS one key, or there's a website where you can see the realtors that are registered in New York,
Mhm.
and he'll go ahead and text them, call them, just be like, "Hey, I'm new. You're new." He looks for the ones that are new. I'm new. You're new. Let's be new together and grow together. And he's been very successful with meeting the real estate agents. And when you develop a relationship that early into your career, those are the people that stick with you for life.
Yes. Yeah, I think the whole, like, I'm new, you're new, let's work together. That sounds like a very enticing thing. But even, at the same time, there are some realtors that will go, well, why should I work with a new loan officer or new mortgage banker when I could work with a senior? How would you respond to that?
Because he'll have them come into the office and meet me. Come meet the manager who's an underwriter for 20 years. Come meet our other branch manager who's been a salesman for 40 years.
Hmm.
You know,
Yeah,
come I may be new, however, my team, my support is not.
yeah, that's a great answer. Everyone is new at one point, and for those of you, I say it all the time, but for those of you that are new, please don't give up. It takes a long time to build the business. It takes a long time to build the clientele. So please just, expect it to be tough. Expect your hard years, expect your hard months, but don't give up. It's a great, rewarding job. And the beginning is going to be tough, but you just got to keep pushing. Sean, do you think the interest rates and home prices will lower anytime soon?
It's a very opinion based question. My personal feelings that aren't backed by anything other than my personal feelings are that rates should continue to lower. Um, I believe they're going to level out somewhere, in the mid fours like they were
Oh,
before COVID.
mid fours, that would be great.
Before COVID, that's where we were, mid fours to mid fives, depending upon your credit and other factors of the loan. And they were there for a while. They were there for a while before the COVID happened and the bond dropped to nothing. And even now, the bond was trading about 4%, which doesn't exactly tell you where mortgage rates are, but it's the best indicator of if it's going to, hopefully start coming down some.
I was speaking to a realtor the other day, and he was saying that the healthiest spot is for it to be around 5%, because if it's too low, then that's what happened with 2008, right? If it's too low, that actually is a bad thing, because then there could be some sort of recession or some sort of, banks going down the hill. So would you agree with this statement that around 5% is the healthiest and best spot to be?
Yeah, like I just said, between 4.5 and 5.5. So five is right in between that. That was a comfortable, solid. The economy was good. Everything was working out quite nicely. We were all very comfortable before COVID happened.
And COVID's, but I heard houses were flying during COVID.
Oh yeah, no, COVID. The rates dropped to 2%. Houses were flying. Values were skyrocketing. Everybody in Manhattan was fleeing to the island, to Long Island. So COVID was a fluke. It was an opposite of what happened in 2008 to
Yes.
12,
Yes.
where the rates came down so much, everybody was able to buy. But that in turn, now housing pricing got driven up. Rates were going up like crazy over the last 2 years, especially last year. So everything runs in a cycle. So hopefully it can level out for a while and we don't have to worry about those things.
It's a pendulum. If you miss the COVID rave, like even me, I'm a realtor, and I actually wasn't around during COVID as a realtor. And that's one of my biggest regrets. Everything's a pendulum. The good comes with the bad, comes with the good, comes with the bad. So that's a really interesting point. Um, Sean, how will the NAR lawsuit settlement affect MLOs?
You want to clarify the NAR lawsuit?
The
What are you
the
talking about?
lawsuit settlement, I mean, it does have more to do with realtors, like they're trying to make it so that there's like a flat fee for realtors, as opposed to like a percentage. So will
Okay.
that affect MLOs much, or not so much?
Not really. Not going to affect the loan originator much, but you're like right now I have some realtors that are strictly buyer's agents. So the buyer's agents, as you know, are being told the seller's no longer paying your commission structure. Instead, as a lender with the knowledge, I tell my buyer's agents, listen, if we go for a seller's concession, or perhaps we can get a little extra value in there and then negotiate it out where the seller does pay your fee. It's always something that's possible to help out those buyer's agents, and it helps the borrower because the borrower's already looking at, let's say they're at their bare minimum. They need 3.5% down. They need a seller's concession to cover their closing costs. And then they're being told they got to come up with another, 1, 2, 3% for realtor commission. That increases their overall output to a point where perhaps some first time home buyers can't do it. So we try to help that, alleviate that.
Right. Well, it sounds like you guys are safe. So, Sean, you said that you're a team leader, correct?
Yeah.
Okay. So did you ever think about opening up your own brokerage?
The dream flies past you that you can open up your own, but when it comes down to it, my partnership and my team, we work together well. So moving out on your own to open your own brokerage, you'd be giving up that family that you've already developed. So we're really driven by the fact that we all work together, we're all friends, we're all, we are all family in my team. So no, I wouldn't really go out and do my own thing at this point.
Right, because you already have a steady salary, a steady flow. So I completely understand. Once you already have that steady flow, you don't want to, you don't want to roll the dice anymore. So just really quick, for the new people, what are the steps to become an MLO?
The basic line of just becoming an MLO is that you go to NMLS's website, you sign up, you get issued an ID number. Then you take a 20-hour course online. It's then 3 hours for like the state of New York. So you get 23 hours worth of class, and then you take the test, which
23
is
hours is not bad at all.
oh no, I know insurance agents are 90. I know you realtors, you guys do continuing ed of almost 20 hours a year, right?
For the course, it was a 77-hour course, I believe.
And then how long is your continuing ed?
I haven't re honestly, I haven't reached that point yet, but I think it is like 20 or every 2 years you gotta take. I haven't reached that point yet. I'm
Yeah.
relatively new, so I'm not 100% sure. So Sean, you said that you've been in the business for 20 years. Tell us about one unforgettable experience you've had in your career. There has to be like one experience that just stands out. Tell us about that one experience.
Um, Probably during the collapse in 2008. In 2009, my company closed. So we had made it, and we had seen friends and other people that we knew at different banks that the lenders were just going down.
Hmm.
And my company closed in 2009. It was a hard blow, and you had a lot of unemployed bankers vying over many less spots. So that would be an unforgettable event, just going through that and having to rebuild and recover after that collapse.
Oh, so that's more of a negative event.
Yeah, oh yeah, that was that's a big impact event. I always say you turn any negative into a positive.
So how
So
about how about oh go ahead. Sorry to interrupt.
yeah, so the you find out you've been with the company many years, company closes, now you're fighting for a job with 10 other banks that also closed because this was the environment at the time.
Yep.
So you have to adapt and get better at it to continue and get yourself solvent again. So that was, yes, it was a difficult time, but it was something that shapes your character. So you can turn that into a positive.
Yeah, and obviously when you're on the job for 20 years, you have to expect difficult times. You have the sort of job where you're not just making 200K a year. Like, of course, you have to expect the bumps. Any job that's 100% commission based, you have to expect bumps. And the thing about our jobs is our jobs and our salaries is very dependent on the market and very dependent on the economy. Wouldn't you agree with that?
Yeah,
So when
yeah,
the
100%.
when the economy is down, obviously it's gonna affect us. So we that's pretty much any business owner or pretty much anyone who has a job that's commission based. The economy will affect your salary. We don't get the same every year. So for you new people, you have to expect that. You have to expect a lot of bumps. So what about one positive, unforgettable experience? Do you have like a positive one, a really, really good one that just stands out?
I have had many first-time homeowners. So it's not just one, but I've had people come to me saying that, they were told it's impossible and they were told they could never buy a house. And when I get them to the closing table and I say, I told you so, I told you we can make this happen, those are what make it worthwhile. So there was no one explosive positive thing that happened. There was one negative thing that happened when the whole thing collapsed.
Yeah.
But thankfully that will never happen again. But yeah, every time I get one of the quote impossible borrowers a home, that's a good thing for me, and that's what makes me keep going.
Yes, when you fall down, because you will have moments, and again, I'm speaking to the new people. You will have moments when you fall down, but you have to get back up. You have to be persistent, and you cannot give up. Sean, what is your long-term plan? Not just as far as mortgages go, but just your long-term plan in general in life. What is your long-term plan?
Um, I'll more than likely never stop working because I love what I do,
Hmm.
and I can work from anywhere that I have a cell phone signal. So my long term plan would be eventually semi retired, travel the world, but I can still work as long as I've got my phone in my pocket.
So you don't mind picking up the phone while you're in Hawaii? You don't mind that?
Haven't been there yet, but no, I wouldn't.
Oh, Hawaii is
I've
beautiful, man. I went
yeah,
there
I've
years ago.
I've like I have the kids, so but I have been in Disney World checking my email while sitting online or taking a phone call. It happens, and yeah, It's part of being there for your client no matter what.
Right. Well, but also, we're not at the point, or at least I'm not at the point where I can retire yet. So for me, I would definitely have to pick up that phone in Disney World. But I would also imagine that that might affect the family dynamic a little bit, no?
They know, they understand. And I don't. I'm not on the phone the entire time. I'm not like that. But yeah, and then before I leave or go away, I make sure everything's pretty settled down so it shouldn't be. But this was about a long term goal. And long term, I know some loan officers that started 20 years before me, and they're happily retired, so to speak, but they'll come into the office, once a week, twice a month, and they still have business. People call them because of a lifetime of good customer service. So, but they're also in Mexico or Spain or who knows where they go,
Yeah.
and they still, never actually stop. But it
Yeah.
becomes part of life, and they're not, doing the daily grind that the new guys are going to need to do. That's your reward after long enough service that the business will come to you and you can enjoy doing the other things that you want to.
Yes, because our jobs, we do not get vacation days, we do not get sick days, we do not get holidays. So if you really, really want to make it, you got to pick up that phone call while you're online in Disney World and answer those emails because that's the only way to make it. Sean, do you have any tips for new MLOs?
Find yourself a good team to join.
Great.
Interview the as many of the team members as you can. See what they're doing. See what their background is. I love to pitch myself because I was an operations guy for so long.
Hmm.
I've been in every position that you can be in, from the opening of a file to the closing of a file. If you find somebody with the knowledge that can help you and give you the advice that, like you said, hit the road. If you fall down, get back up.
Yep.
That's what you got to do to get the name out there. And once you start knowing people, keep cultivating those relationships.
Yeah, the first that's great advice, but especially the first piece for whether you're an agent, whether you're a loan officer, no matter what, try to find a good team, a good solid team, not just a good brokerage, but a good team in particular. I think that's really, really great advice. If I had to give one piece of advice to a new realtor, I would say find a great team like I'm on, not just a great brokerage, that too, of course, but also a great team within that brokerage. I think that a team is very, very important to help you out, even more important than a mentor. Sean, where can people find you?
They can find me on Instagram, Sean Iwersen _MLO. I believe that's linked to my Facebook. I'm not as proficient in Facebook as some of you younger guys, but I'm getting there. Or my cell phone number is posted on that Instagram as well. So that's, I'm a phone call guy. Just grab my cell phone number, give me a call anytime.
Do you want me to put your phone number in the link in the description?
Yeah, yeah,
Okay.
sure.
So I'll put your Instagram and your phone number in the description. Sean, it was great talking to you, man. A pleasure.
Absolutely, Chris.
Have a
Enjoy the
good
rest
one,
of your
man.
weekend.
You too. Take care. Bye.
Bye.